I'd like to invite Mr. Sohail Hussain, Managing Director of the Citibank, to share his perspective.
Ladies and gentlemen, thank you very much for giving me this opportunity. That was an interesting presentation from Craig, where he described the challenges and the opportunities of technology in not just banking, but in other areas as well. When I think of financial institutions, if you look into automation, back in 1950s or 60s, banks were one of the first industry to integrate ICT or IT in a highly integrated way in their operations. The first ATMs started coming in around the late 50s and 60s. Then in 2008, there was an interesting development. Bill Gates, one of the prophets of technology, stated that banking is essential. Banks are not. Banks have traditionally been very reliant on the branch network. Initially, we had customer information stored in servers in branches, and customers could go to those branches, but no other branches. That then developed into when we introduced core banking platforms, customers could go to any branches of a particular bank and get services. The central bank in Bangladesh here then introduced a number of services like EFT, BSEH, RTGS, which allowed customers to transfer funds from one bank to another bank. So it was interesting. Customer convenience was reaching customers, but the footprint of their services was expanding across the country. So no longer was it focused only on branches. So when I look at technology-based banking, I tend to think of products and services which does not need to be reliant on just the branches. And I think that's what's happening now. Whether you call it remote banking, whether you call it smart banking, but right now with the advent of internet banking, the expansion of services there, the numerous payment systems which are coming up, new technologies like clouds, there is a need for banks to have an integrated digital platform or a digital structure, a strategy on how they wish to go ahead. 15, 20 years back, if you wanted to buy something or if you wanted to make a financial transaction, you were wholly reliant on banks. Now you have telcos, now you have payment systems, you have private payment companies like PayPal and others. You have credit card companies where credit cards are not necessarily linked to branch accounts. So how will banks deal with these challenges? I think we have a great advantage in Bangladesh that in many of the technologies, the position the country has taken is that many of these technologies will follow bank-led models. Now, there's a reason for this. That is, this century, there are high requirements of KYC, high requirements of security, integrity of data, and central banks across the world, I think, are beginning to look at banks having a greater role in all of this. But it's up to the banks to make use of this. And if we cannot move forward, and traditionally banks have not, if we cannot move forward quickly and leverage of these technologies, the central banks will change their mind. They will change their mind because the customer demand is for these services to be delivered immediately. So right now, you have internet banking, which can make payments across the country. You can you can buy goods, you can make payments, you can top up your mobile bills, you can make utility payments, and so on. You have SMS banking. Facebook banking is just around the corner. So it's interesting on how technology is going to replicate what branches do. but from the convenience of customers who are not necessarily even near the branch. They may be at their homes, their offices, abroad, in a car, traveling in a plane. And it's our job to integrate all of these services into one direction. So Citibank has been discussing with our major suppliers, vendors, on how we can integrate our strategy regarding digital banking. We are right now working with the International Finance Corporation, and we've been talking to, for example, Microsoft Corporation on guiding us through what the challenges could be in the next 3 to 5 years. We don't want to be followers in this industry. We want to lead. We want to innovate. We want to introduce these services. We believe Bangladesh, with a population of 160 million, with a high number of very young workforce, I believe that the next step for us is to be able to reach out to this tech-savvy generation. And not only reach out and make these services available to them, but to popularize it by participating in events where we can grow their investment, we can grow their interest. So our involvement in Basis Software, SoftExpo 2017 now, where we are a gold sponsor, or you will see in Prathamalo's Science Magazine, or in other areas as well, it's because we want to bring out more and more interest in technology. And then we want to position Citibank as being on the forefront of technology solutions. We have to do this, because in the coming years, branches are an incredibly expensive cost infrastructure. And with this cost infrastructure, the people who actually pay for this are consumers. But for us to be competitive, we have to start looking at how we can reduce costs. So there are a number of suggestions which we would like the central bank to look at. Craig has mentioned about cloud technology. That's very interesting for us. If we can use cloud technology to store customer data, then we will be able to run our operations in a significantly cheaper way. The infrastructure on the ground will be much less expensive. The biggest challenge for banks right now is the number and the many streams of technology which is hitting us. And with all of it comes very high cost. So we're in the market for solutions where we can reduce this cost. I don't think banks are right now willing to give up branches. There are very successful international banks who have gone about with no branches, and they can provide solutions as quickly as possible. But in Bangladesh, I still see the presence of branches for the next 10 to 15 years. So what should be our strategy? It should be a combination which allows us to target different segments as they want it. We have SME customers who want a branch presence. We have other younger customers who wants online, or who wants internet, or who wants wallet services, who wants smart branches. Smart branches are something interesting again. It's a combination of a costly branch and a very efficient and less costly solution to providing the same services. Smart branches don't have too many people. They have very little back office space. The space they may have may be 1/4. And the solutions they have is with video chat sessions, ability to deposit cash, open LCs, ask for letter of credits, ask for home loans or personal loans through video chat sessions with a remote and centrally located relationship base. That's a good way to leverage our people. That's a good way to leverage our footprint across the service, but it's not the only one. With tablet banking, with smartphones, with smartwatches, you can also provide many of these services from the convenience of the customer's location. So many of these challenges are I wouldn't say these are challenges. I would more say that these are opportunities. We need the help of the central bank. We need the help of the government. Currently, there's a great deal of discussion on if you put customer data in cloud, and if it's cross-border. I mean, Craig mentioned about Germany having the best security standards in the world. Now, if you wanted to access that, which means our customer data might need to be stored there. Now, you could actually have agreements, you could have security standards which protects the privacy of your information. But we need to work with the government and central bank and understand their concerns and deal with this. But if we can do this, then costs will substantially reduce. There are 56 banks in the country. Can you imagine 56 banks replicating the same thing? How costly it will be. Other countries, Singapore, okay, Singapore is still, I think, work in process on that, but India, they will be proceeding at a much faster pace. Bangladesh, with a smaller land mass, but a higher population in terms of per square mile and so on, we're in a much stronger position to leverage off this technology. And I think we should do this. I can see in the banking sector that the top 4 or 5 banks are moving very strongly. bKash is a very strong and robust model, which is done by Bragg Bank. We've seen Dutch Bangla's strategy on ATMs. Citibank has gone with wallets and smart branches, as well as internet banking. We're looking at other things behind the front end or in our back office, like data mining or other softwares, to make the best use of how we can provide targeted solutions for our customers. So it's all about the best strategy within the resources of the bank. Beyond that, it is important for the central bank and the government of Bangladesh to help us create the infrastructure underpinning. And when the infrastructure underpinning is expensive, to allow us to use international standards or international solutions where possible. Cloud is a good example of that. But there are other things which we can do which can make also our lives easier. For example, the CIB of the central bank has been a very successful solution. This could be expanded to cover KYC. As you know, when you do mobile banking, when you do bKash, when you do internet banking, others, where there is no direct linkage to a branch, to an account with a branch, KYC is a big issue. And this is a big argument for bank-led models. Bangladesh, as you know, is the second largest mobile banking country with about, I think, about 56 million accounts or something like that. KYC remains an issue. The central bank can perhaps look at standardizing KYC requirements and then making it available to the banks just like they do with the CIB. That will cut down duplication of costs. The central bank has BACH, RTGS, EFT, which allows us to transfer money easily. These can be very quickly expanded to cover much larger areas beyond the country's borders. But I think there's a requirement for the central bank to take a larger role in terms of dispute settlement between the banks, and not just leaving us to deal with dispute settlements with the courts, where time frames is much larger. If they can do that, then what you will see is a much higher confidence level in this. And this is not the end of it. You can then take it forward to the capital market. You've all seen what the SEC has done regarding capital market and investing through online services. These can be expanded as well. So the more and more we can work with not physically having to go to a branch or a brokerage office or an SEC office, we save money for the customers, we save money for ourselves, we create new lines of revenue for us. I think the biggest challenge for banks will be creation of new lines of revenue. Banks who tend to stick with the 50s or 60s definitions of staying with bringing in deposits and bringing in loans might have a share of the market, but I wouldn't call it a sustainable solution. So it's up to the rest of us to take advantage, leverage of these services. The economy is going to move in this direction. The population is going to move in this direction. And banks need to follow very quickly so that we can provide our shareholders the return of wallets, but much more importantly, provide the best services to our customers. Thank you very much.
Thank you. That was a very interesting presentation.